All right. We are back with another founder interview. We have Michael from Quants. Very exciting new project that we're eager to dive into today. Happy to see you all. Happy to be back from the holiday. We are back in action. Let's kick it off. Michael, why don't you introduce yourself? Tell us about your journey into crypto, and then we can dive into Quants a little bit more.
Sure. First of all, Ian, Nick, thank you very much for having me on this podcast. It's a pleasure to meet your community here. Just so I provide you a quick background about myself, I'm in the crypto space ever since late 2016, where was introduced to the underlying technology behind Bitcoin, DLTs, distributed ledger technology, and the blockchain, because I was sort of really interested in the technical background of the entire sort of new wave of online money. So I studied it in quite a great depth. Then I wanted to sort of share my curiosity very early on during a TED talk that I hosted or sort of that I held in March 2017. And during that time in March 2017, I really sort of started to dive into crypto from all multiple sort of verticals and narratives, right? So I started to explore the new ecosystem that was being built, which is Ethereum, and the sort of the capabilities of Ethereum that it provided to the market. And at that time, I wasn't sort of full-time in crypto. I was actually running my traditional marketing firm out of London, which I started after I graduated from my master's degree at King's College London, which is a pretty good university there. So I did sort of traditional Web2 marketing for around 4 years. However, then during the DeFi summer of 2020, I really started to invest sort of on the side into early stage crypto startups. So I started to angel invest a lot into the Polkadot ecosystem, especially some of the projects that were sort of building on Polkadot early on. Did a couple angel investments. Then I realized that crypto is sort of the career path that I want to pursue. So I started to effectively angel invest and also provide the startups that I invested in with strategic value add in terms of marketing. So fast forward a couple of years, I actually took my angel investments and structured it under Katana Venture Capital, which was my proprietary VC fund that I launched, hired people to help me with the due diligence, the fund operations. However, it was still entirely my own capital. So that's how I got a lot of good connections in the space, met some very interesting people along the way. And then when I saw that the market was turning a little bit bearish, which was at the beginning of 2022, I actually started to invest more into sort of market neutral strategies because I still wanted to be in the market. However, I didn't want to sort of be exposed to the downside, which I was anticipating. So actually, that's when one of my close connects from Bybit has introduced me to quite a few quantitative hedge funds. I allocated a portion of my capital with each, but really one quant fund really stood out to me. And the founder of that quant fund is now my co-founder at Quants, because we effectively set out on a journey to democratize a previously very opaque industry of quantitative hedge funds. And we are now tokenizing and bringing a solution for the retail investor so they are able to invest like the institutional investor. And that's what we are doing with Quants. So when it comes to the AUM, we have two sides to the platform. One of them is my co-founder's Quant Fund, which is still up and running, managing institutional capital. But since we wanted to democratize access to the same asset management tools for the retail investor, that is where we have launched Quants, and that's what we are building today.
That's awesome, man. One thing I just wanted to highlight for our followers here, Michael's very experienced in the industry. We always love to see when founders have been in the space for multiple years. It's a little risky if it's like, oh, I got in last year. This is not that situation. You've been through multiple bull runs, multiple bear cycles, seen it all, developed a lot of relationships, and I think it sounds like you've identified a product which benefits from blockchain technology. You're saying you're able to decentralize basically this quant based investing, which was previously just for, I imagine, high net worth individuals, hard to get into these quant funds. You're democratizing that. So tell us a bit about the product. What does that mean? What does quantitative a hedge fund even mean? And then what does it mean for the average person who might be interested in getting involved?
Sure. So let me sort of explain it in a step-by-step manner. So first of all, you need to think of the investment vehicles that are available to you right now as a sort of a crypto retail investor. So you can invest, either long or short into the spot market or futures market. Then you can invest into yield farming protocols, staking. You can earn yield from lending or borrowing. And then, you can also invest into algorithmic based strategies as, for example, some sort of trading bots, that are available there. How quantitative trading is really comparing and sort of standing out from the previous methods is that a lot of the times when it comes to sort of producing yield within the crypto space, a lot of the yield is actually coming from sort of insufficient mechanisms. For example, token treasuries such as staking rewards or others. In comparison to quantitative trading, where you actually model sort of a mathematical formula to deploy it on top of the market, right? So that is a really sort of a simplified version of what quant trading is, where you really replicate sort of mathematical models which are rational in nature and feed them sort of certain data sets that we utilize AI to basically filter through the data sets to then produce trading signals. So the way in which quantitative trading can really provide retail investors with a big edge in their portfolio is with the sort of diversification factor. Because when you think about market neutral strategies, a lot of them are betting on the concept of actually harnessing the volatility that is present within the crypto markets without being either long or short. So you're maintaining a market neutral position while you are able to generate yield and alpha for your portfolio. And this is primarily good, during periods of bear markets. But then for the sort of the bull markets, what we have is a smart long strategy. And we also have sort of numerous enhanced holding strategies which utilize a factor model, which is a form of quantitative. It's a form of a quantitative model. It utilizes a certain factor model that is effectively a black box that my co-founder has developed, and the trading strategy is deployed on top of the user's portfolio in a fully non-custodial manner. So the user maintains custody of their own assets in their own exchange, or at a later stage, will be deploying in a fully decentralized manner on top of Arbitrum on DYDX. And the user can select what quantitative trading strategy they want to invest into, and the trading is effectively automated and carried out on their behalf. So I would say that is the primary benefit of investing into automated quant strategies, that it provides the investors with the ability to process large data sets in a fraction of a second in comparison to sort of performing trading decisions based on technical indicators or on a manual level.
Yes, I mean that's a really high IQ breakdown there. Essentially, this stuff goes on in Web2 and traditional markets all the time. The biggest, wealthiest individuals, institutional finance, all use these trading strategies to try to make money in the ups and the downs in the markets while, limiting risk on their assets. Sounds like you guys are bringing this to Web3 at a very high level from a proven strategy. You still have that institutional component, but now you're kind of opening up your product to retail investors or people who just want to put in $1,000 or 10,000 as they make money on this bull run. Maybe they pull some of those profits into this quant strategy. So what does that mean for, we're a platform that looks at projects that have a token. So what does that mean for the retail user of the product, but also for the token holders of your product as well?
Yes. So when it comes to the Quai token, which is the primary utility token of Quants, I would say the one of the primary sort of mechanisms that we have in place for the utility of the token is the ability to access the platform. Because in the nature, our Quant strategies require sort of a very extensive experienced team, to sort of maintain them. So we need to have some sort of a barrier to entry. So first of all, we do have a collateral ratio that the user needs to maintain to be able to access the sort of the quantitative trading strategies. So that is, I would say, the first utility of the token, which for the sort of token traders, that is generating the buying pressure for the token, because with the increase of the platform participants and investors, there is more sort of, I would say, demand for the token. Second of all, since we are for the API connectivity, which is phase one, we are charging a flat management fee on top of managing the user's assets, just because we cannot charge a performance fee because we are fully non-custodial. However, during the phase two, once we deploy the smart contracts on top of Arbitrum, we can actually code it inside of the smart contract to charge a performance fee once the users withdraw their initial and sort of or their investments, right? So the way this will work is, for example, a user invests $1,000, they leave it there for 6 months. Let's say they generate a sort of a nice return of 50%, then we take a performance fee from that 50%. So the performance fee will vary depending on the strategy that the user is investing into. And the performance fee, a certain percentage of it based on a randomizer, will be then utilized for token buybacks. And the tokens will be bought back, either put back into the liquidity pool, so we actually increase the liquidity of the Quant ecosystem, or it will be sort of in a simple buyback and burn. So that's to be basically determined. Which scenario happens is to be determined by our Quant DAO, which is the third big utility of our token, because we believe in democratization and making the entire ecosystem very much permissionless in the long term. And we want to incorporate the Quant DAO as the core decision-making epicenter of, let's say, the future of quants 3 to 5 years down the line.
Yeah, so it sounds like really straightforward token utility. The more user acquisition and the larger amount of money they're putting into your quantitative trading strategies, the more tokens that are locked up, the more buybacks that are occurring, the higher the liquidity and the more burns. So very straightforward. So with that said, is the product already live? What kind of AUM do you already have? Or what are your projections for user acquisition costs and everything along those lines? Because really that is what's going to fuel the token utility and the speculation on the token price.
Exactly. So when it comes to the entire token flywheel, we are having a B2B2C type of a relationship with both our B2B partners and our B2C customers. So on the B2B side, what we are actually doing is entering into strategic integration partnerships with leading exchanges. Currently, we are collaborating with tier 2 and tier 3 exchanges, but we, of course, have the sort of goal to also integrate with tier 1s, hopefully later down the line. But what the type of a sort of a strategic integration, what we are exploring now is to offer our quantitative trading algorithms to already existing exchanges that have futures and spot available. Because when you think about it, a lot of the sort of crypto investors, they utilize now, majority of the crypto investors, they utilize a buy and hold strategy where they perhaps invest, some of their holdings into a staking pool. However, by integrating a quantitative trading algorithm on top of their sort of passive holdings, they can, of course, sort of outperform just the basic staking yield. Because if you look at it, sort of the very modest of our returns, like the most modest algorithm that we have is generating around 18% per annum, sort of annualized in a sort of averaged out over the past 4 years. So it has real market data that it has been performing on. And that is coming at a maximum drawdown of only 2%. And every single one of the crypto investors is already accustomed to some sort of volatility in the market, right? So it doesn't really make much difference if the user actually can sort of witness a 2% drawdown on their initial principal. For example, if they invest $1,000 worth of Bitcoin, because Bitcoin, the beta returns, are also very volatile already. So let's say that at the end of the year, if the user invests, let's say 10 Bitcoin into or into one of our quant strategies through the native exchange or through our platform, at the end of the year, they would have, for example, 11.8 Bitcoin. So it's really sort of focusing on the 18% that they could have gained more Bitcoin off.
Yeah, I want to just take a time out and sort of provide a bit of context for not only the product, but also the team. So real quick on the team, we've actually known the Quants team and led by Michael here and also the devs for over a year now. And what I love to see is when a project, first of all, is building during and through a bear market, which is what Quants did. We met you guys last year during the bear, and the product was already in existence, and you were already building. But the second thing I really like to see is the evolution of the product. I remember maybe 6 months or longer ago, you and I spoke, and we talked about, okay, how do we make this product more decentralized? and you actually went ahead and did that. And so you see someone building to the bear. To me, that shows commitment. And then secondly, willingness to take feedback and evolve and improve over time. So I think you guys are in a very strong position now relative to when we first met. So I commend you there. The second thing I just want to point out real quick before I jump into the next question, we talk a lot about this channel about passive income. Passive income is, I think, a very important part of anyone's portfolio. And of course, nothing on this channel is financial advice. We just point out different things that we have learned and our opinions about them. But in my experience, having a passive income opportunity as a part of your portfolio, whether that is, you talked about staking, whether it's yield farming, but now you guys are bringing something that's very innovative and I think a little bit different in the market with this quant trading. I think that's something people need to keep a close eye on and think about. Hey, I know 18% might not sound, life changing when everyone's out there hunting for 10x memes, but the reality is a solid 18% compounded over 10 years or whatever, that 11, because the first year you invest 10 Bitcoin, then it's 11.8, it grows on top of 11.8, and then it's 12, 15, 30, it explodes. This, compounding interest can really explode your portfolio. So I think it's something people should not sleep on. Research this more, but this is a really nice sort of component of a passive income part of a portfolio. So I just wanted to point that out. I'm glad you guys are doing that. I'm eager to learn or try the product out. So tell us more about the launch of the token and the plan around that as it relates to launch pads, exchanges, and marketing.
Sure. So actually, just to comment on the 18%, that is for the most conservative of the strategies that we have. Actually, we are averaging in between 60 to 75% per annum on the market neutral and also the smart long strategies that we have. So currently, we have 17 strategies on the platform, which are all sort of developed by the in-house quantitative team that my co-founder basically brought onto the project with his expertise, having worked at Citigroup, where he managed a sort of a very big quant fund, or sort of a macro global quant fund, and now democratizing that. So the API which I mentioned there was very modest. So we also have other. To answer your question for the launch strategy, so our TG is scheduled in within the next few months. We are rolling up the product as an IDO on Seedify, and we are also confirming two other very strong launch partners, which I cannot comment on right now because, of course, that time will come when we announce all of them. And for the exchanges, we are planning to list on two major exchanges, which have had a very good track record with our strategic partners that we have entered into with a very strong market maker. And we will be then actually, after our initial TGE listing, we will be integrating with quite a few brokers to really expand our token ecosystem to as many communities as possible. So there is definitely a lot on the line in the post-TG environment of the Quai ecosystem.
Yeah, there's no guarantee, guys, but I always look for the alpha in what you're saying without you slipping up. But you mentioned you're trying to create partnerships with these tier 2 and tier 3 exchanges. It would behoove all of those exchanges who do agree to a partnership to list the token for near free or very reduced cost, which leads me to believe that Quants quickly, for a newly launched project, will find itself on many exchanges, and that gives more eyes, more users, more potential product users, and of course, more trading volume, which all leads to higher prices. Now, not financial advice. I know you can't talk about price, but me as a token investor, those are things that I'm looking for, and you saying that leads me to believe that that might become a reality.
Yes. So when we integrate with a lot of these exchanges, they're really liking the idea of our product because in the end, when you think about the exchange, they will want to generate as much trading volume as possible for not just for our token, but for every single token on their exchange. So integrating a quantitative trading algorithm that is benefiting both the end user, so the end investor, because they are generating more alpha for their portfolio, and it's also actually benefiting the cryptocurrency exchange because they have an increased trading volume. So our B2B model do, it's really focusing on a percentage of the trading fees that we generate on top of those exchanges. And we actually, have the flywheel effect where we redistribute those profits that we generated back to the customer on the B2B2C type of a flywheel, So all the revenues that are being generated are in some way being redistributed and sort of repurposed inside of the Quai ecosystem.
Yeah, I think you're actually dead on that these centralized exchanges, they want volume. That provides them obviously ongoing revenue in the form of trading fees. So the very natural sort of partnership between what you guys have built and these exchanges. And let's see if that then turns into favorable listing conditions. I think it probably will over time, but that remains to be seen. So I think it's a very it's a product that aligns nicely with the centralized exchange of this industry. But I just want to take a step back as well and talk about how I sort of view the crypto markets in general, and then as it relates to quants. So as to investing, right? Investing is a very social thing. You're sort of, as an investor, in a sense, kind of predicting, well, how are other people going to respond to this project or this company, or this token? Are they going to be, is this going to be perceived as bullish to other people? And in crypto, my thesis is generally that most people are here to make money one way or another, whether that's trading, whether that's DeFi, whether that's lending, whether that's staking stuff. They're here to increase the value of their own portfolio, right? Let's just be honest. And so your product, that's what it's designed to do. It's fundamentally a trading product, right? It's advanced, it's quantitative, it's leveraging these models, and it's doing things in a different way. But fundamentally, what it's there to do is increase the value of portfolio. And so if you assume that, okay, most people in crypto, that's what they're there to do, well, then they should respond favorably to this. And then therefore, from that social standpoint, people should look favorably upon something like quants. And again, nothing financial advice, but that is how I look at it. It's people should if people are in crypto for the reason I think they're in crypto, to me, there's no reason why they wouldn't like quants, right? Assuming you guys can actually fulfill all the things that we've just talked about, right? Execution is going to be huge in that. But that is, to me, how I'm looking at quants. I think you guys can do very well. Not financial advice, but I'm very intrigued with what you guys have built. I'd love to try the product as well. So you and I'll hit you up after this call, get you. I'd love to get onboarded. By the way, real quick on that, are you still doing the? I remember early days there was you guys were requiring some sort of NFT to access the platform. Are you still doing that, or is it now changed a little bit?
Yes, so when it comes to the NFT, it's a free mint, which is a access pass NFT to be able to access our platform and view all of the investment sort of strategies that we have on board. So we have two modes of signing up to the platform. For the decentralized route, we have the NFT present, which currently we are standing at around 1,800 active users who have minted the NFT, and those are on-chain users. And keep in mind that, we have been focusing on building the product, not on the marketing, and now we are really entering into the aggressive marketing phase. So we are anticipating, to have more than 10,000 users by the end of the year, hopefully, when we, really sort of trickle down a lot of them to actually become platform investors and invest through Quants. So when it comes to the Quants Plus, which is I would say the core product of the entire Quants ecosystem, and that's what we call our sort of asset management platform. The users can either sign up on the decentralized route through minting the NFT, or they can sort of verify their email and sort of go through the Web2 route of connecting their email and a social login. So they have these two opportunities. And, since we believe in decentralization, but at the same time, we want to cater to as many investors as possible because, we believe in growing the ecosystem of quants. We have both ways available.
Perfect.
Awesome.
I think we've kind of gone over a lot of stuff, and we're kind of at the point where, we kind of always ask these product CEOs and the guests on the show, what is your crypto paradise? For you, what does it mean to have crypto paradise? Me and Ian have done videos on what it means for us, but what does it mean for you?
For me to have a crypto paradise, it definitely means freedom, right? I mean, when you think about crypto, I travel all around the world. I'm based in multiple countries. Sort of where the biggest sort of crypto activities are based out of. However, one of the things that I really enjoy the most about crypto is the freedom to really be able to sort of rapidly shift between, these multiple countries. And, I see this as one of the sort of very strong selling points, for new people perhaps looking into sort of starting a career in crypto, because you really do get a certain lifestyle, when you get into sort of crypto. And I do like it from the perspective that, of course it is challenging. It is something that keeps you on your feet. You do get a sort of a sense of challenge, but at the same time, at the end of the day, um, due to their sort of remote element, you are able to also have time for a very good work-life balance. So you're the one in the end who sets up your Calendly. You can, for example, as I did yesterday morning, I went on a very nice 2-hour bike ride at 6 a.m., got to the office at 8:30 and ready to start the day. Not saying that this is impossible in traditional, sort of Web 2 and all the traditional other careers, but with crypto, it's just the sense of freedom that you get which makes you feel very good. So I would say that's crypto paradise for me.
That's awesome, man. Yeah, I'm with you. It's all about the freedom, right? Set your own schedule, travel where you want, when you want, meet who you want, do what you want, right? And that's what crypto is able to provide, right? And that's not a guarantee that it works out for everyone who jumps the industry, but I do believe if you work hard enough, you put your mind to it, you put in the hours, you put in the years, frankly, you will ultimately get to the point where you can live that crypto paradise and have that financial freedom. So with that, is there any final points or thoughts here before we end the interview?
Yeah,
Yes,
where
so
can
I
we,
think
go ahead. I was just going to say, where can we find Quants? What's the Twitter? What's the website? Is the product live? And then how do we get involved with the token?
Sure, I'll get to that. Just to summarize on your point there, Ian, I think it's definitely a aligned vision, between quants and what we have been discussing here. Because when you think about the sort of freedom that you get, from crypto, at the end of the day, you want to sort of delegate your assets, to be managed in the best possible way, right? So, that is one of the reasons why we are actually launching quants to provide the retail investors with the access to the same asset management tools as the institutional investors utilize for their portfolio management. So I think that's a very big selling point, that we are definitely emphasizing with the introduction of quants.
Hell yeah. Yeah, I'm pumped for what you guys have built. I really, again, I like that you guys started this thing in the bear, you kept persisting through the bear. Here you are having built for at least, what's been about 2 years now since you've been working on quants. And still having
Or two and
not
a half.
ramped up the marketing yet. 2.5. There you go. So that shows to me dedication. Obviously, do your own research, everyone. Everything has a certain level of risk. Nothing is guaranteed in crypto or in life. So please do your own research before making any decisions on quants, but keep up the great work. We will share your social links at the bottom of this video. Please follow these guys. Of course, like, subscribe to Crypto Paradise, and we will see you on the beach.
Goodbye, everybody. Thank you very much for having me.